Have you seen this play out in other markets where this systematic default investing has happened?
Yeah. This is very interesting, and I always give there are like who said that? Mark Twain. History doesn't repeat, but it rhymes. There are striking parallels between what happened in US from 1980s onwards and what's happening in India over the last couple of years and will happen over the next 20 years. First was the Paul Volcker in 1980 who said that I will break the back of inflationary expectations in US. In 2016, RBI put the monetary policy framework that we will ensure inflation is hovering around 4%, which is a big shift from what we were before. Number two was Ronald Reagan, who said government has no business to be in business. And our prime minister has been saying less government, more governance, and we privatized Air India. We underestimate it. The third is the demographics, India, and the baby boomer generation of US. And the fourth was the 401k movement in US. And India, we are seeing that SIP and how people are kind of now looking at long-term investment. What it did for US was in next 30, 40 years, whether it was equity, whether it were bonds, whether it was high-yielding bonds, muni bonds, private equity, venture capital, real estate trust, infrastructure trust, all the asset classes did phenomenally well, both in terms of the size of the market as well as the asset class returns. I think India is in that the 20, 30, 40 year period when Fidelity Capital would have been 40, 50 billion dollars, maybe the size of money that we are managing, we manage 75, 70 billion. They are today managing trillions of dollars. BlackRock didn't exist in 1988. It got set up in 88. It's $10 trillion. Blackstone is $1 trillion. So same thing will happen in India.
And what does this mean for the Indian markets? Because all of this money has to find its way into good quality stocks that hopefully fund managers can buy. Are there enough high quality papers? Is there enough supply of good companies that we can invest into?
Of course. I mean, who would have thought some of the large caps today would have been a mid cap yesterday and a small cap day before? My point is that maybe a couple of years back they were mid cap and a couple of years back they were the small caps. How India has grown. We are still at $2,500 per capita GDP. So we have a long way to go. Again, 1980 and today, if you look at the size of the US GDP per capita, etc., you can relate to that. From a $4 trillion economy, as we become 7, 10, 12, 15, the number of businesses, the existing businesses, the scale that they will gain, and large number of businesses are yet to be listed in India. We created a $1 trillion market cap in a matter of 7 or 8 months. The last $1 trillion got added to it. Now that just shows the power of now Indian market and what the primary market would be over the next 10 years. There's so many businesses funded by VC and PE today who are yet to get listed, gain scale, and then come to the secondary market. And I think that will continue. Long way to go. And a lot of global companies will raise money from Indian markets because we would become so big. We are third, fourth largest in terms of number of companies, one of the largest in terms of market size. So a lot of global companies will raise money from India.
It seems like, mutual funds are here to stay. They will continue to grow, that there is enough supply of paper. What I find really exciting is the fact that mutual funds are so well regulated relative to any other instrument, right? But there is a perception among, I would say, the wealthy investors that this regulation hurts their return. Now, what is your perspective running a mutual fund, both as earlier fund managers and now as CEO? How much of the regulation is actually impeding returns in mutual funds?
That's not true, because the most important thing is the trust and how that trust gets built because of the transparency, because of the risk management, because of the compliance, because of the governance, because of putting those guardrails, putting those boundaries that actually enhances the longevity or sustainability of those returns. I mean, everybody can be a hero in a bull market. What is that Mangar's quote? Don't confuse brains with bull market, something like that. But the longevity and sustainability also comes from the well regulation. We are so scrutinized in public. We are so well audited. We are so well governed. I think it helps investors in the long run. A lot of my friends and everybody says, "Arey yaar, itna regulation, ye tough hai, skin in the game," the kind of everything that we have. And I keep saying that think from a long-term perspective. This will build more trust. This will ensure that you don't make mistake. Investing is more about avoiding errors of commission, not reducing errors of omission. Yeah.